Welcome in. What you can expect in this video is probably as the title says, 2 day trading models and 1 swing trading model. This is truly all I believe you need in order to be profitable. Now, besides these models that you see on screen, I'm going to be talking through a lot of psychology through this that is going to help you build confidence in this model as well. One thing that a lot of traders get wrong when trading early on is the fact that they'll hesitate to take these entries when in reality, the reason that these models are profitable is because taking them over a long period of time, you end up breaking through that threshold of profitability, or if it's a 50% win rate model above a 3-to-1 risk to reward collected, or a 40% win rate model. But in order to achieve that, you have to take those 100 trades and achieve that maybe 5-to-1 risk reward model. So a lot of you out there who are less confident in your trades and are bouncing back in between videos trying to find models, this is all I use, and I've made millions of dollars trading, and I have the proof from it. I posted, I've talked about it on podcasts, and I've been coaching for over 5 years, and I've been able to coach for over 5 years because my students have results. So in this video, it is going to be very impromptu. You can see these 3 professional images on the screen. I do have full ebooks on both of these, but I wanted to do a quick video where I can go through each of them in an environment where I can kind of show you examples on how each of them operate and kind of mark up charts live for you, so you kind of get insight into how I would trade them, and then later on how you can execute them in the session. So we are going to start this video off by going over the first 2 swing trading models. Now, these swing trading models are used on mainly futures, but these can be used as well in crypto. I'm going to kind of show you them both during this, but we're going to start with the far left, which is our opening range break model, then the ILM, and then the QP, which is the quantum pivot. And I'm going to kind of show you this on futures because a lot of us are trading prop firms or trading futures accounts, and this is where I want a lot of us to start. So without further ado, let's get into my top 3 models that I would trade if I was to start it all over again, or I was to recommend a new trader models for them to trade, because these are easy, they're simplistic, right? They don't have 10 different flywheels running in order for you to find confluence to enter a trade. Like, you can enter very early and very often, and this is what you need. You don't need a model that's holding you back from taking entry because there's not 6 out of 13 confluences hitting for you. So let's go right into NASDAQ. And the first one we're talking about today is opening range break. And this is going to be the easiest one. Then we're going to move into a little bit more of a more advanced model, and then a definite advanced model into the end of the video. So the first thing that we're going to talk about being the orb is the idea of how to trade it. The orb is the easiest because it gives you, there's this time of day you have to trade it, and there's 2 lines that you have to mark. So what I'm going to do here is take this replay feature and bring it all the way up until 6:30 a.m., which is New York session open for, I think, all of us. It was 6:30 a.m. for Pacific Standard Time, which is the majority of my traders. So I'm going to populate one more candle here. This should be the 6:30 a.m. candle. Sweet. Now, what you need to wait for with this model is 1 candle after market open. So it's the first 15-minute candle after that 6:30 a.m. session, and it is going to be right here. So we're going to mark out this high, and we're also going to mark out the low. This is going to be our orb, and what I'm going to do is take the top. I'm going to mark this orb M15. There we go. We're going to do the exact same thing at the bottom. So essentially what we're doing here is understanding the range that NASDAQ has produced after the first 15-minute candle. We're going to go to the 5 minutes. And the next, and this is the beautiful thing about this model, is now you get to wait. Now the patience is forced upon you. You're going to wait for an M5 candle closure below or above one of these candles that you, or one of these lines that you've produced on the screen. That's it. And I'm going to go into what happens after this. So we're going to wait for an M5 close here. A lot of the time, you'll see how valuable these 2 levels are, because price will not close below. So you can see right here, not closing below, not closing below, not closing. Now you have closed below, and this is the trigger. So now we have triggered an entry. And what you're going to do after this is take the high to that M15 low with a standard deviation tool, which is generally the Fibonacci retracement. And you're going to use these parameters, the 0, 0.5, 1, -1, -2, and -3. And normally also have that -5 on there. So after you have this entire model out, you have 4 standard deviation levels. You have the M5 closure below. What you can do now, and this is an M5, so it's a minute 5 closure. I want to be very specific there, is we can take, in this case, a short entry at that current market price. Now, The next question you ask is, where's the stop? Well, it's going to be at the 0.5 of the range. And the TP is going to be the goal of a -4. I'm going to show you how this is the goal and not the exact TP every time, because you're going to have a parameter where we're going to continually take profits along the way. I'm going to show you that right now. So we have the M5 closure below, and let's start populating some candles. And this was as of September 3rd. I think this is today's session at least. Yeah, this is September 3rd, today's session, where we actually traded this live in our community. And it was really fun because it was just a straight down day. Now, the first thing I want to show you is, as you get this -1 standard deviation hit, the best thing from here is generally to move that stop to break even. You should not normally have a retest of that level after it has already occurred. So after you've already had that sweep, right, of the -1, you should not have it revisit again. So you can move stops to entry here. But the true goal, and this is where we call it price weighting. I actually got this from one of our students, Casper. He's actually now a huge coach, but Casper actually made this a price weighting model. And this is exactly how it's used, and probably one of the most important models of this strategy that I've recently implemented is, as you hit these TPs, 1, 2, 3, 4, as you hit it, this candle purges it, you're going to go to the open of the previous candle, make a line. That is where your stop loss is going to be. So you're going to move your stop loss there, and if price hits it, then that's where you're going to get out. Now, as price comes back and hits its -2, -3, yada, yada, we'll see exactly how you react to this. So I'll move this out to show you this trade is still operating. Here's the -2. Let's make a line. When price hits it, there's the price tap. What happens here is you would have moved, price taps here, no closure below, but generally the stop would have been right here, and that's where you would have started trimming your position as your stops were at entry. Now, price will continue throughout the day here. This is generally what happens with the orb model, is it's a continuation structure. Normally, you have continuation days on NASDAQ and on ES. This model doesn't do too well, and I'll show you a losing occurrence when this happens as well. So you probably sold half of your positions here, price hits here, we're going to take the opening candle of the previous, right, M5 here, and the candle after that takes you out of the full position. So you got a huge trade throughout the entire day, which I think you average out at about risking 1 to make about 2.75, given that you sold here as well. So you'll price weight throughout the day, but that's it. That's the orb. It's opening range break. After the first M15 candle, mark the high, mark the low. If an M5 closes above or below, take your Fibonacci, extend it from the low to the high if it's breaking above, or from the high to the low if it's breaking below, and then you have your TP targets. Bada bing, bada boom. I mean, how much easier do you want me to make it? This is the recipe for successful trading. Now, that's a winning model, but I want to be very frank and showing you guys a lot of these models here by showing you losing ones as well, because not everything wins, of course. So, and that's another piece of psychology I want to put into this video. Let's go to Friday, August 30th. So let's go to August 30th, Friday, because there was a losing trade here that I want to go over, and I took this loss live with my team. Yes, we do take losses live, but the beautiful part of it is I get to show everyone the losing trades and the winning trades live. I'm not just some guru that hindsight trades, never does it live. I actually execute this live with everyone to show you that this is the reality of trading. You will have losses, and if you don't have that expectation or don't understand that that's a possibility, and you think that every loss is a threat to your success, you will be unsuccessful collectively in the long run. I can guarantee that. Okay, so here is the first M15 candle print from August 30th session. I'll mark these out with the label so we understand that as well. Here we go. We're going to mark this with the orb 15. Orb 15. So this is your opening range break, and hey, you guys remember what to do, right? We're going to move down to the M5 and wait for candle closures above. I think we got one immediately to stay, if I'm not mistaken. So there's an immediate one, and generally it shouldn't happen immediately. You should have a few closes above it, but nonetheless, this is the losing trade I took, so let's go over it. And here are all your take profit targets, stop loss at mid-range, and let's stretch it there for now. You know we use price weighting, and as you can see, almost immediately comes back down to the stop loss. So expect this on days where you have opposite trending, and this is what you do when you get like the opposite trending days is if you have, and you can see right here, right? There's no M5 closes above or below now. So you take this loss here, but you can continue to trade through the day. Boom, massive displacement to the downside. Now you can take another short position here with stops there. Hey, and now let's just reverse the exact previous trade, and that's okay to go like this. You do have a little bit of a wider stop, but nonetheless, we'll add. If you do have a candle that closes this aggressively at the range, I would prefer you add like, let's say one contract here. And then if I'm not mistaken, price came a little bit back into the range. If it retests this, I would say add one more. But if you don't get a retest, let's see if we get any of it. Yeah, no retest into this range. You do hit your 2 here, right? Price weight with the previous opening candle. Looks like price hits that, and then you buy back your position. So there's a exact methodology of how I would take this trade. And then I think it's continued through the rest of the day. Let's just play this out. I actually don't remember what happened here. No, it went to the upside. So you had a losing trade here and then a winning trade here that made up for that losing trade. So overall, a losing day for me on this session because I didn't stay until, what was this, 8 a.m. I got off around 7:40 and didn't take this next trade, but that's exactly how you do it. So that is the orb, and we're only 10 minutes into the video. That is the opening range break, a very easy model, and it shows up every single day for ES, for NQ. Please try it. Now, let's go into the ILM. It is a little bit of a different model, and let's clean up this chart here, and let's see. I do not remember if we had an ILM today because we only traded orb, but we'll go through it and kind of show you guys what it looks like if you were to have an ILM model. The basis to ILM, and the actual acronym for ILM, is Inverted Liquidity Model. We're waiting for an inversion of liquidity, and we're also waiting for liquidity to be ran in order to find some sort of entry to then take to the upside. Now, I think this is Friday session. This is what we'll actually do here. So this is Friday session where we actually had a ILM. I remember this one because this is actually one we took on Friday. So check this out. When you're looking at the chart with ILM, you need to understand the first thing is, where do we think stops are at? Well, generally stops are at pretty high intensity locations, such as a down move like this and an immediate move back up, and then it proceeds to move all the way up even into this order block up here. So this would be a place where stops lie. So I would put down, we would go sell side liquidity. A discount range, also there is massive discount normally at the bottom of ranges. Of course, this is the bottom of the range. We did not have a market structure break, so this could be a target. We're gonna mark both of these out here. This is the first step of ILM, is marking out where I think this is actually previous day low. Yeah, so this is previous day low. We're gonna mark these out, and if price reacts to these, we're gonna be looking for a certain entry model, and this is the basis to ILM. Now, we only have listed these sell side targets, right? These sell side stops that may be taken out, but normally with ILM, you're going to be target the complete opposite range. So it's going to be this internal liquidity to an external range that was produced before. And here it is. This is going to be called our buy side liquidity. Now, what we're looking for on this is actually going to occur on the minute 1 time frame. So we have all of our levels listed out. We know exactly what to expect. We have a level here and a level here, and we're going to play out this M1 time frame and kind of wait for one of these larger liquidity zones to run. So we just want to run stops right here. For example, we have now ran stops. The goal of this is going to be finding a point where there's a change in a state of delivery. We know the market's bearish, it's running sell stops right now, but is it going to reverse? And in this model, you're looking for a reversal. ILM in of itself is a reversal. We'll go to the M5 right here because I think this is actually where it populated. M5, you'll see this. You had a fair value gap here before, and now it has become a inverted fair value gap. And all you need to know about inverted fair value gaps is the fact that a fair value gap before it failed, right? That's all it means. And you can even check this here. This is also potentially a fair value gap that fails as well. Now, there it is. There's a closure outside. So this one fails. Also, this one fails. And now we know that there's a potential for price to completely reverse. It took sell side liquidity. We believe that price, if it does change the state of delivery, will target buy side liquidity premium. What you do from here, and most of the time we're going to use this on the minute 1 or 30-second, as you can see here. I don't believe actually we have any major population of this. Not here. Yeah, it's not as clear as on the 30-second or M1, but move to the M5, it's the exact same ideology. Most of the time you'll find it on the minute 1, but this is what's going to happen when you find this model on any time frame, is you're going to take a CMP market entry after closure of that inverted fair value gap. So such as right here, you would take entry. Stops are going to be an M5 closure below that because you're on the M5 time frame. And then, like we'll say here, we buy one position here. It's a little bit further up in the range, but let's just say that's your average. All you're going to do is hold this position until it takes out buy side. Most of the time, I do not prefer people to stop at break even for this because it is such a powerful model that you will get the TP eventually. You just have to be patient, like such as this. It ends up hitting the TP there. You sell off your portion of your position, and then there's the play. But you can see how long this could have took and how it could have maybe even brought some of you out of your position. That's an hour and 10 minutes after entry where not much has happened. And then the subsequent, what is this, 2 hours after, 2 hours after, you end up taking the buy side premium. So that's ILM. Let's, how about we go to Ethereum? Maybe let's switch it up a bit and show you guys some things on Ethereum because this works on crypto as well. And some of you may not even trade futures, but these work on all different markets. It essentially does not matter where you're trading. The concepts are exactly the same. So I believe that there was a massive short opportunity as of recently that we had taken. Let's find one here. A lot of this I want you guys to go back and even see for yourself. Like go back and just back test this. We have months and months of back tested data for ILM, and I don't have all the trades marked out here. So let's just find one. We'll even go to current market price and kind of show you what's going on here, what to expect. So here's current market price. Here's the M5 frame. If this inverts, I'm going to assume that price is going to change the state of delivery and take this high. Now, I don't have time in this video to wait maybe the 4 hours that this could potentially take. So what we're going to do here is look for a similar situation where price takes out maybe a buy side liquidity such as this, right? This is a perfect opportunity to check this out. Buy side liquidity is taken out. That is the first key of the ILM model. So we're going to go to buy side liquidity is rated, move to the M5. While it was rating up into that level, did it produce any sort of fair value gap? It sure did. Now, this fair value gap fails here immediately after. We're going to make this IFEG, and then we're going to take a short position on the current market price of the closure outside, stops M5 candle closure below, and then your TP is going to obviously be a major source of liquidity to the downside. Whatever you may deem this as, this is the discretionary part, but most of the time it's going to be your structural swing lows. So such as this, if we have a swing low, I do not believe we do, we'll just call this sell side liquidity, right? And then there you go. That's a massive 1 to 3 risk reward trade. All you needed to know was when buy side swept, was there a fair value gap moving up into that? Since it has swept and moved back down into the range, has that fair value gap failed? If it did, let's assume a change in state delivery and go reverse to the trend. So it's a reversal catching model. And there it is. That's 2 different examples. Now, are there times where it fails? Abso-freaking-lutely. There's times it fails. And in the PDF and ebooks, and I have a whole video on ILM. I go over a lot of the losses and exactly how to handle them. But I'm sure we can find one pretty much instantly here. Maybe this looks like a win as well. So I do urge a lot of you to back test this. You can see this. Here's a sweep. Here's the inversion. There's even a retest on the inversion here. Let's say you get on the retest and you take profit into move to M15, maybe into this fair value gap here, right? Why not? And then you can even take a smaller trade like this. So it doesn't need to be where you're trying to collect this like entire move to the upside. Obviously, this is beneficial because you have a higher risk reward limiter and you can earn a lot more, but I'm not always pressed to make the entire move. Making a 1 to 5R is great, but I'm also okay with making 1 to 2, 5, and 1 to 3. But again, this does fail. It is hard to find when it fails, but it can fail. Like here you go. Here's a such example of trade failing, I suppose. Sweeps, you have M5, change state delivery here. You would take entry, and then maybe you want to target this extreme high at the top of the range. Stop is the M5 candle closure below, and then there you go. You get stopped out. That's an example of a loss, right? One way to prevent losses as well is if you use this little tool I call the Playbit EMA. If you're trading below it and you're quite far away, like you're quite far from the average mean distance, I'm going to remove everything to kind of give you guys a better idea of what I'm talking about here. This is all pretty close to the EMA here. Then you get this massive move down. Normally, when this massive move down occurs is when you're going to find an ILM reversal back into that level, right? And when you're like trading below it, let's find here. Like when you're trading right below this red line, I would prefer you only look for shorts to the downside until proven otherwise, and proven otherwise is defined by that massive sell. I mean, you understand what happens because it's a short-term event of high volatility to the downside and or, right here. to the upside, right? I only prefer you to take longs here until you get this massive move up, and then you can look for reversals back down. And actually, that's exactly where the previous reversal I showed you was. So there's ILM, 20 minutes in the video. Time to talk about QP. Orb, day trading model. ILM, day trading model. QP, swing trading model. Now, this will be a fun one because I actually do not trade QP as much as of recently, only because, and don't be scared that I'm saying that, I only say this because day trading is a lot more profitable at the moment. Now, the whole idea between QP and a lot of these other ones is very similar ideologies. I'm simply looking for a bias shift on a high time frame, which is normally talked about as a market structure shift or market structure break or an MSB. So let's go into like some places where this has occurred at. So the first thing, and we're on the, I think we're on the 4 hour here. Let's find some places where we get market structure shifts, right? Now, a market structure shift I define as like, let's move this drawing tool on so I can mark a few things out. So here's your low. Low doesn't raid, and it ends up taking this high that produced a new low. So when this high was hit, I'll consider this the MSB. I'll consider this the point at which I believe the market told us that the bias is changing. And this is basic ICT mechanics here from 2022 model. And the next thing I'll look for when this bias shifts is some sort of higher time frame PD array, whether it's a fair value gap, inverted fair value gap to go long into. And actually, we're going to start this off with showing you when the model loses, because this is actually an example of it. And one reason why I've been using it recently, because I don't think swing trading is supposed to be used all the time. Day trading can, because you're in and out within 4 to 5 hours, and I've actually been pushing myself to day trade more. If you're in Playbit, if you're in my private community, you know that beginning of the year, I was swing trade heavy. Now, very day trade heavy. Almost every day I'm taking 2 to 3 day trades and then getting out of the market because it has been so choppy. And if you pull up with the daily here on ETH, you'll see that, you know, a lot of people, look at this range right here. I think this is August, right? Look at this August range. Not a single swing trader could have profited in this range. So I think undoubtedly it's very important that we're starting this off by showing you a losing model on this, because this is what the entire transparency of this is what I want to show you. So here we go. The whole idea here is the fact that if you have a market structure break, if there was some sort of imbalance, obvious imbalance moving up into that level, I think that we would bounce off of it, fill our orders, and then we would target the next highs, which would be these cluster of highs here, take the average mean, and this would be the equal high of the range, and you would want to take a long position that looks something like this up into that range and stop on a candle closure below, right? So that's exactly what I would want it to look like. In this example, it fails, but watch this. Let's go into the beginning of the year, and this is where a lot of my students struggle is, hey, like when do I use the QP? When does it make sense for me to be swing trading more? And you're going to be able to tell when like market conditions are screaming at you that it's time to swing trade. And I know it sounds a little odd to say that, but the idea is if previous QPs were working, just go hindsight back test it a bit, then I'm sure it's going to work again. But if it's not working consistently, such as it was here in July and August, why would you trade it? Why wouldn't you move to a model that's giving you a little bit more accuracy in the market and telling you that it's actually more profitable? So a few of the cool things that happened in the early year for ETH were this massive move I think all of us made money on, but this massive move in of itself also was a huge structural shift, right? Let's go here. There's two massive MSBs. So this high was the high of this entire range from April all the way to May. Now this high produced a new low, right? It took these lows here. That is actually not the exact lows. It took these lows here, and then it took these lows here. So we know that there's a lot of strong sellers at this level. If price can push through this with a lot of energy, I'm going to believe that the market structure has shifted and we're going to continue up in reverse. And that's exactly what happened here. Now you see as we break this level, we can move down to the hour one and see if any sort of opportunity, if you would have had any opportunity to get back in on this. And I don't believe you did, which is why we'll bring up the next level, which is, if we can get to it back in April, here we go. So you can see, here's where the MSB started. Price never came back down, but that's completely fine because then we have this exact same level up here. Now, price hits this. If you go to the H1, we can see that undoubtedly there are some massive levels, even on the H4, I believe it is. You have this massive breakaway gap, and then you have this fair value gap, which inevitably is your entry for the QP. You get the market structure shift. You want to take entry into the midpoint, so about 50% into the zone. If you don't understand how to find the 50% of the zone, you can simply edit a lot of your boxes that you're using for the fair value gap and just add a middle line, and this is where you want to take entry. And then you'll quickly swing trade this position, stops below the low, up into the internal highs that were produced, and just like this. And this was a crazy trade we had hit on ETH. I mean, it was a quick 1 to 4.51 R, and that's a QP. So it's a swing trade model, and this inevitably took, I believe, 3 days to take that. There's also another huge trade, probably one of the best examples of the QP was actually on a coin that's doing exceptionally bad now. Ape, we already have all the analysis here, which is fucking perfect. So let's go over this and kind of talk about how this trade made me a lot. This trade made me almost 30 grand by itself. So let's go to the 4 hour and break down the God tier model. And if you're in Playbit, you remember this trade. So trend continues here, as you can see. Boom, the whole trend here is bearish, right? We can see that price continues to break lows, no new highs. Price continues to break lows, new highs. But here in October, so Halloween of last year, it broke this high. If broken, find a fair value gap before it for entry. Where was the obvious fair value gap? We literally set our limits. We did a limit order. We're going to buy here, and we get an immediate dump into this price, and then it's filled, and we're immediately up, I don't know, 20% in like the next day. And then we ended up swinging this pretty far into the highs, the start of this fair value gap up here. So this was a 1 to 11 risk reward trade that took me a month. So that's 11R from a singular trade in a month, and all you're waiting is for a market structure break and the fair value gap before. And I'll do a little illustration of this as well. So you have price continuing to trend down, it's continuing to break structure, and you inevitably have something that's forming like this, and then a previous high that was assumed to be protected is ran, and you had before this a fair value gap of some sort fill out, so something like this, right? If price tags that MSB here, I expect to come back to this imbalance, or even an imbalance that wasn't tested, because we can see that in this example this is tested, right? Maybe it's down here. And we have price come all the way back down, retest this imbalance. You take your entry, and let's connect this. That looks odd, but you would take profit into that internal high right there. And even if you want to go a little bit further with these TPs, because they're swing trade models, take TPs into the external high, right? Because this is technically equal highs right here in this, funny little model we've made. But this is the reality of the QP, is you're looking for a market structure shift. Let's go to Bitcoin. There's a few trades on here. I want to focus on this slightly because I think a swing trading environment is coming up soon. As I said earlier, check this out for August. Let's go to the daily and show you how bad swing trading has been recently. How many of you are able to swing a tight 2.5% range on BTC? I know a lot of people, even since May, really haven't been having the best time of swing trading either, just because it's inevitably the worst time when you come into August, September. Check every single seasonality cycle. This is what occurs. So by the way, it works for shorts as well. You can flip your chart if you look at long bias more often than not. This helps you figure out when to short when you're kind of predetermined to be bullish all the time. So QP in this example, let's find one real fast for you guys. Let's go back to when swings were absolutely slamming. So here's a small one that I saw pretty much immediately. Is this idea of you have this downtrend right here. So you're trending down and we're waiting for some sort of protected high to raid in order to give us confidence that we believe that price is going to make a change out of this. And I would say it's right here. This is where the MSB occurred. Here's your MSB. And then from here, we'd be looking for some sort of higher time frame PD array that gave us confidence, and that price may retest one of these zones and give us a bounce back to the upside. And it looks like I'm going to have to go up to the 12-hour here, and you will have your clean 12-hour fair value gap that was never mitigated. A little bit choppy on this model, on this setup here. but this is exactly how you'd want it to be. You have your market structure shift. You might have to wait sometime. I mean, in this trade, you waited 7 days, a week for it to come back and fill your entry. You take midpoint entry, no 12-hour closes below this, and even for this longer term model, you'll just stop out at the lows previously and then take profit at these equal highs. So that's a quick 1 to 2.75 model, and maybe you wait 10 days, 5 days for the TP to play out. So there it is, another very easy model. It is just market structure shifts. We understand where the protected lows are now, and then we want to take profit into the external liquidity above us. If we don't have any obvious external liquidity, take it into the internal liquidity above you because price dropped from above head in order to fill that imbalance. So you're guaranteed to have that short-term internal range high or low that you can take profit on for the QP. So there it is. In 30 minutes, I've taught you 3 models as simply as I can. If you do want to learn more about them, you can click the link in the bio where I will show you in live trade in front of you all 3 of these models. There's a free trial. Come and test it for yourself. If you don't like it, go cancel the membership. That's how confident I am in these models. I have literally taught several students over the past day, just the past day, these models, and they were able to use it in today's session to become profitable in that session. I can't say that they're going to be profitable long term yet. There's a lot more than just learning these. So just remember, I'm giving you a lot of the foundation for you to work on. Just knowing the orb or the ILM or the QP isn't going to make you profitable. And that's the harsh reality that a lot of gurus and other coaches won't tell you, is that just because you're good at the technicals doesn't mean that you're going to be good in live environments. You're not going to be good in live environments if you don't have confidence in the models, right? Just because you know them doesn't mean that you're going to be profitable. So people that claim Holy Grail are simply selling you a dream because they're not actually giving you the psychology behind it. So I talk a lot about that in my streams, and how you should be confident in your trades, and how taking a loss is actually thinking about taking a loss and the idea of it being detrimental to your success is hurting you more than you think, because now you're associating a loss with having no success in your career. And unfortunately, if this is the career that you really want to be all in on and lock in with, losses are a significant part. ILM model, I have a 67% win rate on this, and I doubled my portfolio in a month. A lot of you would say, if I didn't say that second part, that a 67% win rate is absolutely shit, and you wouldn't ever want to take the time to learn a model that has such a low win rate. And the unfortunate reality behind that is I think none of you will be successful if you think that way. Go ask your favorite trader. A lot of successful traders use some of these models. Go ask them what their win rates are. No successful trader, at least who's making millions of dollars a year or hundreds of thousands a month, have above an 80% win rate. And if they do, I commend them, but that model will not work for you because it's most likely hyper frequency trading. You can go look up people like Don Ho, who were hyper frequency traders who consistently made less than 1 R per trade, and that gave them a 90+% win rate. But inevitably, if they dig themselves into a hole, 5, 6, 7, 8 losses in a row, they blow their accounts or are not able to recover from that. So that's the piece of psychology that I'll give you guys today. If you want to sit down with me and sit over my shoulder and watch me trade every New York session and watch my members trade it daily, because they're learning these models and you can see their success and you can talk to them, and you can talk to a lot of my other coaches who use these models that trade Orb every day, ILM every day, and the QP. To be fair, QB is not traded as much anymore, only because you should be day trading more during this highly volatile environment. A lot more risk to reward to be given to you. So that's it for today. 3 models, 2 day trading models, 1 swing trading model that I would use if I was going to start from scratch again. And truly, I am blessed to say that I have these at my disposal because it's all I need. I got the New York session trading model. I got the Ethereum perpetual trading model, and then I have the high time frame swing model QP. I'm set. I have all my tools in the toolbox that I need to be successful long term as far as the technicals go. So there it is. If you guys want these ebooks, I've been showing these off. I have full ebooks, so in case you just want to print them out, I have a lot of members that print them out and just have them near their desk to have all the information checklist there for them. Just click the link in the bio. It will not only give you all 3 of these guides, but a free 7-day trial just to come watch me trade live. Just come hang out, say what's up, cancel membership if you want at the end, but I guarantee that you'll have a great time and it'll be one of the best experiences you have. I'll see you in the next video. Thanks for tuning in. I'm Ty. Bye.